The investor day is coming up. And so, the surge has got us thinking that it'd be a perfect time for a trade school, Dan, because you have been vocal. You've been short Tesla.
Yeah.
And so we want to ask you a couple questions that we always get from our viewers.
Yeah.
First of all, when do you know when you cut your losses?
Well, it all depends. I mean, like for me, like right here, I have a lot of conviction about the fundamental view of this. And to Karen's point, like, did it deserve to be 102? I don't know. But I started shorting it over the summer at 300. Okay, so like, and covered it at 200. And I was actually very clear about that. And it dropped off the face of the earth. It went from 200 to 100 in a month. Okay, so yes, it overshot to the downside. For me right now, I started putting a short out, but doing it through long TSLQ. That is an inverse ETF that tracks the performance of the underlying stock when the stock got back towards 160, okay, had that huge rally. I've been averaging into it. So I just want to make a couple points about, listen, most viewers right here, most retail investors should never short a stock. You know why? When you buy a stock, it can go to zero. If you short a stock, it can go to infinity, all right? That's not a great feeling. The other aspect of shorting a stock is that it takes a lot of margin in your account to do that. So when I usually use short exposure, I do it through puts, okay? I buy a put or a put spread or something like that. I'm defining my risk. But in a case like Tesla right here, if I look at the stock at 209, the at-the-money straddle, looking out a month, okay, that is the call premium and the put premium. I know that sounds, 530 options action a little bit.
Right.
That is $35. That is 16% of the stock price. That is the implied move between now and March 17th. That's crazy. If you're just paying that premium and the stock goes nowhere, you lose that, okay, on one side of it. That's about 8% in either direction. So how am I trading this? How am I risk managing it? Why do I like this TSLQ? Because I'm long something. Most investors know how to be long something. They know how to manage their risk when they're long something. That's my view on this TSLQ. I've been averaging in, okay? And so right now, I'm down about 10% on my average. That's not great, but like I know what I think I'm doing here, and I'm not going to let this thing get out of control here. Is there ever a stock that could get out of control? It's this one. It's the upside and the downside, but that's why I'm not using options. The premiums don't make any sense right here. I'm using this reverse or inverse ETF. I can risk manage it a lot better than being short the stock or being long puts.
You have been short in the past, Tim. Tesla.
Yeah, no, this
is it tempting at this point with this run since January?
To me, on valuation, the reasons that I was in this trade on the short side, and I was doing it mostly through options, in fact, almost exclusively, was there was a balance sheet issue back then. I thought there was balance sheet, I thought there was absolutely a question about the continuation of that balance sheet. I think there was a lot of things related to just the company's ability to stay in business that were part of it.
Right.
That's not a question, not even a question. Then it became a question of valuation. Look, on valuation, if you can get out to 25, and you can make this an 18 times multiple for a company that's so. Not bullish. If anything, I'm bearish on Tesla here. But it's a very different story for me to be playing from the short side.
Right.
Just quickly, if Tesla, a TSLQ, where would it get to zero? How much does the stock have to move
I don't know.
to get to
Listen,
zero?
this is what we spend a lot of time talking about this stuff. This is like one position that I have. Is it not feel great right now being wrong? Of course not. But like at the end of the day, I mean, I'll just say this. This is one thing, and I think this is kind of the thing that investors are not pricing right now. I don't think things get better in 2023 between us and China. When you think about this company's reliance on China from a manufacturing standpoint, access to rare earth materials to make their batteries and access to their consumer, they have less than 10% market share of EVs over there. That quarter was not good in China. If there's any hiccups between us, okay, and China that get worse from here, this is a problem for them. I think 40% of their sales come from China. This is kind of why I'm in this trade right now, and I think this plays out over the next few months.